Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Bitcoin, taking a look at the macro picture a little bit and taking a look at the on-chain data, following the money and seeing what is going on there with BTC. As I get into the video, if you find it useful and informative, hit the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Now, we do cover a lot more in our Discord server for our Patreon members, so do check that out, linked in the description down below as well. If Patreon isn't your thing, you also can become a member here on YouTube as well. Okay, let's make a start with that. Let's take a look at Bitcoin, right? So what we'll do is we'll start things off by taking a look at the on-chain data. Okay, so this is our kind of top level piece. It helps us understand kind of where the flow of money is going, more specifically the flow of Bitcoin. So up in the top right hand corner we have these three boxes, and actually before I kind of get into this, I kind of want to say that this is a report that I've pulled together from on-chain data sources and analytical companies and firms. I have an experience with analytics and building my own kind of databases, data sets and whatnot. So I've built all of this for Cheeky Crypto. This is something that you can just go and find somewhere else right now, but I will make it available to our members in the coming months. So you'll get access to basically cut the data however you see fit and all that kind of stuff. But yeah, just to kind of, I guess, answer some of the questions that I've seen in the comment section. And this is a blend of lots of different analytical companies, data sources coming together and being mapped and basically then cut and sliced and analyzed with kind of how I would normally do things in my day-to-day life over the last 15 or so years. So anyway, enough of that. Let's talk about the actual data and what it means. So inflows, outflows, and the difference, these three boxes. So basically, essentially what we've got going on here is from the 1st of January 2023 up until yesterday, which would have been the 24th of February, we've had 1.5258 million BTC going onto the exchanges, and we've had 1.5213 million coming off the exchanges, which basically means 4,460 Bitcoin more has gone onto the exchanges than has come off the exchanges. Now, when it comes to the inflows and the outflows, just to kind of bring it back down to the basics, we think of these as supply and as of demand, right? So inflows would be the amount of supply going onto the exchanges being made available to purchase, right? Being made available to sell. So when Bitcoin goes from a private wallet onto an exchange, the kind of basic assumption is that that Bitcoin is going to be up for sale. Okay, that's why you move it from your cold storage device to your exchange. You're looking to offload it, right? And likewise, when you have an outflow, that's your demand. Essentially, that is you go into an exchange, you're buying it, and then you're withdrawing it from the exchange. It could just be that you've moved it to the exchange and actually you changed your mind and you're moving it off the exchange, right? So either way, we look at this as supply going onto the exchange and demand taking it off the exchange. So when you have a difference that is positive rather than negative, then the supply is outpacing that of the demand. There's more supply than the demand can handle. And basically what that means in a nutshell is that you're in a bearish situation, okay? If this number was negative, then you're in a bullish situation, at least that in its kind of basic sense. Now, for the most part, we look at this aggregated across an entire year because it helps us understand those fluctuations a little bit over a longer time period. Now, because we're only in February, this is actually a reasonably small number, and you know, we've seen it dance around a little bit. We've seen it in negative and we've seen it in positive. So 4,446 4,460. It isn't a lot of Bitcoin. It really doesn't swing the needle in either direction. It's a very neutral market at the moment, not bullish, not bearish, and basically all we're really seeing is supply and demand pretty much being equal. So this is what I was saying the other day, when essentially the market is fragile because it doesn't really take a lot to go in either direction. A little bit of positivity and bam, you'll get a little bit more demand coming in here and the price will move up. And likewise, a little bit of negativity and you could drop a little bit because it doesn't take a lot to kind of shake people out. It's a very nervous market. Now, we can compound these inflows, outflows, and differences by taking a look at what is actually going on with the line graph. We can see it's very, very flat and has been incredibly flat since the 18th of December 2022, right? We can see on this line graph, it's incredibly flat. It's basically been a ranging market. Even though prices moved up, it's not really a demand-driven price movement. Now, as we take a look, we can see that we have the net difference change on a 30-day average. So basically, the difference between inflows and outflows across a 30-day period. And each one of these bars is that 30-day average, right? And we can see that during the FTX saga, lots of people were withdrawing from exchanges. And then during December, it gets very, very comfortable with exchanges again. And we can see that we're just finding equal amounts of buying and selling occurring. Not bullish, not bearish, very neutral. Okay, so again, all the data on chain is telling us that we're not in a bull market, but we're also not necessarily out of the bear market. We're not necessarily bearish, we're not necessarily bullish, and we're kind of just waiting to see which way the market wants to go. This then obviously pulls into question, why did the price move the way that it did? And a lot of that was actually down to Forex traders trading on the dollar versus the Japanese yen, the euro, the sterling, and so forth. And essentially, really what happened here was a lot of Forex traders were selling off the euro, selling off their dollars in favor of other currencies, dragging the DXY down. And as the DXY fell, you then saw the cryptocurrency assets go up in value, at least initially, mainly because you need more dollars to buy your cryptocurrency assets now, as the dollar was devalued. So we can't just reflect on thinking we've had a fantastic move to the upside and automatically believe that that is a demand-driven pump, because it just simply wasn't. So when we start reflecting on the data, it really does make it a little bit more black and white, that it is not a demand-driven pump to the upside, but it was obviously starting to get some FOMO traction, a latter part of it. But we can see here very neutrally that whenever there was demand coming in, there were some sellers willing to sell their Bitcoin to them. And we'll talk more about that in a moment. So let's actually progress on to the inflows and the outflows in terms of a line graph. Nothing much here to kind of note, other than the fact that the volumes are incredibly low. For the same time period, back in 2019, when the previous bull market had started, we had 2.4 million, right? Yes, the numbers were very, very close still. But the volume was significantly higher, whereas where we are right now, the volumes are just about 900,000 Bitcoin different, okay, for the same time period. If we would assume that the bull market had started in the same way that it did back in 2019, then the volumes are significantly lower than they were back then as well. Okay, yes, the price of Bitcoin was vastly different, but essentially times, you would still expect the same kind of volume of Bitcoin to be moving around nonetheless, considering we have significantly more players now than we had back in 2019. The growth potential, the exponential growth of accumulation of Bitcoin wallets and the number of Bitcoin wallets is vastly different between 2019 versus where we are here in 2023. Again, this is something that we can take a look at by just taking a look at the shrimp wallets over the last 365 days. You can see in November of 2021, there were 800,000 wallets with 1 Bitcoin or more. Now there are nearly 1 million, right? So we know that there's significantly more players, even at the smallest scale, yet we don't necessarily see the same amount of kind of demand-driven pumps that we were seeing back in 2019 from fewer wallets. Anyway, nonetheless, let's kind of stop derailing ourselves and move on. Here we can see that we have the 0.01 BTC wallets. These are basically Bitcoin Dust wallets, and they were getting shaken out pretty heavily. So these are probably the most vulnerable retail investors. And we can see up here, there was a peak of 11,588,959 wallets that had over 0.01 BTC in them. We can see that we came down to a low just a couple of days ago. In fact, yesterday, 2 days ago, on the 23rd, 11,471,000 536 wallets. So we can see that they've been shaken out quite a bit. They did pump up recently, just a few wallets here. I don't think this is really anything to get too excited about, but essentially we're seeing that most vulnerable retail investors starting to get shaken out of the space, and this is something that I think is going to start to creep up the different size wallets as well. Okay, so we're starting to see a little bit here, expect a lot more though. Now on the other retail side of Bitcoin wallets, we can of course see the krill, which is over 0.1 Bitcoin, the shrimps over 1 Bitcoin, and the dolphins over 10 Bitcoin, all of which are accumulating at the moment. Okay, so again, that narrative that has been shielded to these retail investors is that we're in a bull market, right? And the very definition of a bull market is that the demand outpaces the supply. And of course, I'm going to bring back the original data that we spoke about, where we do not see that demand outpacing the supply. In fact, right now, although it isn't really reasonably neutral, at this point in time, even on a micro level, the supply is outpacing the demand. So we're not necessarily in that bull market that we're kind of being shielded from lots of these other influencers across various different social media platforms. So unfortunately, a lot of retail do believe that this, just like the June low, is the bottom, right? The bottom was in June, and it took I like to laugh about it because apparently no one knew it was coming. But if you're paying attention to the data, you knew that FTX was in trouble, and therefore you could have shorted it ahead of time, like the cheeky community. Nonetheless, June was the bottom, and it took a black swan event to pull the market down, right? Because no one would know what that was. Now, essentially, you can label it up a black swan event if you want. Doesn't really matter. A lot of people did know it was going to happen. It was pretty obvious it was going to happen when you actually pay attention to the data. That being said, people believed that the June was the low and the bottom was in, and we were in a bull market thereafter. And then you're getting the same narrative right now, that November was the low, and the bottom is in, we're in a bull market now. This is because it's easy to sell something bullish than it is to sell something bearish, right? It gets the clicks. So a lot of these influencers love to do bullish content because, it gets the clickety clicks on the videos. So just bear that in mind. The data doesn't support bullish right now, not at the macro level, and definitely not here inside this data. So although these retail wallets are going up right now, it's important to reflect on what kind of money it takes to actually move the market to the upside. Follow the money, right? So if retail money is going in and they are accumulating, well, someone's got to be selling it to them, right? Because there's always a buyer and there's always a seller. And we talk about this pretty much every day. But here we have the larger institutional level funds, right? We've got the sharks, which are over 100 Bitcoin. These are traders, essentially, and we can see that these guys actually accumulated Bitcoin before the pump to the upside, and now they're in take profit mode. Okay, we can see that the whales up here are 1,000 Bitcoin or more, have been doing nothing but decreasing their positions, i.e. they are the ones who have been selling their Bitcoin to the retail investors. And then of course we've got the Kraken, which is over 10,000 Bitcoin per wallet, and you can see how they've been fluctuating around, kind of pushing the market in various different directions. Not a coincidence either. So when we start reflecting on these, we start thinking to ourselves, okay, well, why is this important? Why are we looking at it, and what should we really be thinking about here? Well, for the most part, if we reflect on the previous bear market of 2018, we can take a look at what the shrimps were doing, right? And the shrimps were believing that the bottom was in here, and you can see the accumulation that fell after, right? Then, no, this is the bottom here, and they accumulate, right? And then, no, this is the bottom, and they accumulate. And they kept accumulating up until this point here, where they just didn't think they were going up any higher, and that actually it was all a scam, and, Bitcoin it's just dead, right? It was a scam the entire time, all that kind of stuff. All the narratives that were being shielded back then from mainstream media and so forth. So during this flat period right here, after being told that was the bottom, this is the bottom, this is the bottom, during this flat period here, they decide actually now is the time to sell. Okay, and they sell right into the very bottom. Now, if you follow the big money and the institutional funds, the whales are over 1,000 Bitcoin, you can see that they are not participating. They're little fluctuations here and there, right, during this entire bear market, but they don't really start buying until retail starts selling to them. And you can see it right happening in here. You can see that they start to massively accumulate as those retailers are selling, all the way down into the bottom. Okay, and if you take a look at the Kraken size wallet that accumulated during the bear market, it's the Kraken size wallet that actually just drags the entire market down into that bear market low. And I bring this up because if we were to reflect on what the shrimps are doing over the last 365 days, it's the, oh look, over here in January of 2022, the bottom is in. And then over here in June, the bottom is in and they continue to accumulate. And then over here in November, the bottom is in and they continue to accumulate, right? Whereas the whales are looking at this slightly differently. They took this opportunity of 32,000 Bitcoin, $32,000 Bitcoin, up to $47,500 to $48,000 Bitcoin as the opportunity. And then they just have been coming out ever since March 2022, and they are hitting new lower lows in their wallet counts. So the thing that we have to ask ourselves here is that if June was the bottom over here, then our whales were selling the bottom. And if November is the bottom, then the whales are selling the bottom. Okay, and they hit new lower lows on their wallets over here in December, and they've hit fresh new lows down here in February of 2023. In fact, only 2 days ago. So we can see that there's new lows on our whale wallet data. Okay, the number of whales participating in BTC has been on a continuous downward spiral. So big money, such as these whales and these institutional funds, are continuing to come out of Bitcoin, and the people who are buying it happen to be retail investors. So the same question that I ask all the time is, do we think that the retail investors are going to be on the right side of this trade? Or do you think that the institutional funds are the ones that are going to be on the right side of it? Or do you think that essentially whales have made a mistake and we're in a bull market? Let me know what your thoughts are in the comments below. I personally think that the bottom is not in, because why would they sell the bottom? And these are the players who dictate the price of the market. To top all that off, we can take a look at the Kraken that's been accumulating during this bear market and is yet to flood the market. When this does flood the market, I expect prices to continue to go down quite a bit, but that's kind of my thoughts on it. We compound all of this down with what's going on in the real world as well, and we end up with a pretty clear picture that is most probably going to have to be a new lower low at some point in the future here for BTC and this bear market. Therefore, this means that we're not in a trend to the upside, and that we are essentially just in a corrective bear market rally structured move to the upside. I spoke about this the other day as well on the daily chart here. I'd actually labeled this up as a W, X, Y, X, and Z, but one of our members of our Discord server did rightly point out that it's not really possible to be a W, X, Y, X, Z, and it's true, it's not. But there's very limited amount of structures that we can actually label this up from an Elliott wave theory point of view, at least to keep it nice and simple for the sake of this or these videos that we do. The problem that we have here is we're not in a 5-wave structure. Okay, we're not doing this. That's an impossibility. It's an impossibility because we do not have 5 waves down here that can map. Okay, that's not a thing. So essentially what we've got going on is we have a W, X, Y, X, and Z down here, and we've got a string of different corrections going on all the way up. Trying to map that up into a bigger macro is very, very difficult. So at best, we could look at it maybe as a 335 if you really wanted to. But I think essentially just for simplicity, we'll just keep it labeled as a W, X, Y, X, and Z, just to kind of keep it as simple as we can for communication purposes. Essentially, this entire thing is corrective to the upside and has an expiration date, in my opinion. The big issue that we have is when we start zooming out, the higher this thing goes, if we do go up into that 27, 28K range, not only is that going to be the area of resistance, as we can kind of see right here, let me just go ahead and draw this on. Right in here, this area is going to be our resistance area. Okay, this is basically 26,700 to 28,800. Not only is this going to be the resistance area, but this is a big enough reset for us to be thinking of a big A, B, and then C structure taking us down significantly deeper. Not something that I would like to see, but something that we should be aware of nonetheless. So all in all, I think we should be cautious. Not only are we heavily overbought on the weekly chart and things like that, the data on the on-chain side of things are not really supportive of a bullish market, but more supportive of a bearish market. Although right at this moment in time, it is rather neutral from the inflows and the outflows outflows point of view, volumes are about 900,000 Bitcoin short of where they were back in 2019. So although we're neutral, we definitely not got the volume that we would normally expect to see from the start of a bull market. So just be a little bit cautious with that. We do see continued selling pressure from the larger wallets, with only continued support of retail investors at the low levels. And I don't think that's really sustainable, not considering inflation and interest rate hikes, and of course a looming recession. I think essentially with everything that's going on from an economy point of view and then a potential war point of view, I just find it incredibly difficult to think that we are in a bullish market right now. But let me know what your thoughts are in the comments down below. I'm going to leave the video right there. If you found it useful and informative, smash that like button. Do appreciate that. If you're new to the channel, then why not go ahead and subscribe. Join us down in Discord. And guys, I'll catch you all in the next one.